Hey guys, what's going on? Jeb here, and in today's video, we're going to be talking about the small correction that has taken place ever since the Fed cut the effective federal funds rate by 25 basis points yesterday. As we predicted in yesterday's video, Bitcoin has actually gone through a correction following the decision from the Federal Reserve to drop interest rates. We discussed the possibility that Bitcoin would fall back down to this downtrending level of previous resistance, now support, and now we're going to be talking about whether or not Bitcoin can build a rally from here. So without much further ado, let's go ahead and dive right on into it. If we start out here on the daily chart, you will see that I have a blue line for every single one of the last three effective federal funds rate decisions. And you can see each and every time the Fed has made a decision, whether it be a cut or not, Bitcoin has gone through a larger and larger and larger correction. Our first correction following a Fed decision was about 5.6%. This was back in August of this year. The next one was a 7.5% correction. And then following the Fed decision on the 29th of October, Bitcoin would drop a total of 27%. As of yesterday, we saw another Fed rate cut, and we also, very importantly, saw an announcement that the Federal Reserve is going to buy back $40 billion worth of U.S. Treasuries in January. In 1 month alone, in 30 days, there's going to be $40 billion worth of quantitative easing. Now, they didn't use the word quantitative easing. That's not what they said, but that's what they mean. When the Federal Reserve is using its own purchasing power to purchase treasuries and also in other events, mortgage-backed securities, that is what quantitative easing is doing. Depending on whether or not, and we don't exactly know which one they're going to do, but depending on whether or not they're buying short-term or long-term treasuries, they're probably going to focus on short-term treasuries. The purpose of this buying is to drive down the rate of the treasuries as they're bringing down the rate of the effective federal funds rate so that the overall market rate can go down, increasing liquidity because less amount of capital is flowing into the interest payment to the Federal Reserve. Right? Because treasuries are loaning money, are borrowing money from the American people. And so when you drive down those interest rates, you end up paying less interest. The federal government ends up paying less interest to the American people, or in this case, the Fed, whoever bought the treasury, right? So that's the reason that the Federal Reserve buys treasuries. It is specifically to drive down the interest rate on the treasury and also to fund the United States federal government. And so that leads to liquidity. And over the next 6 to 12 months, following that $40 billion purchase, you will start to feel the effects of that as interest rates start to go down over the entire global economy, which will allow for more capital to go into principal instead of interest, which allows for economic stimulation with the trade-off of it being an inflationary event because those $40 billion did not exist prior. Anyway, that's a long way of saying that the effective federal funds rate decision and the $40 billion stimulus is extremely, extremely important, and it does indicate that we're moving into a liquidity cycle. And so before we can talk about the short term, let's talk a little bit about the long term. What you are going to see is that when we saw the United States Central Bank balance sheet, let's make sure that's pulled up. When we saw the United States Central Bank balance sheet start to increase in 2019, we ended up seeing that it took a little bit of time before the Federal Reserve really started USC BBS, really started ramping things up very aggressively. This is the United States Central Bank balance sheet, this line right here. You can see that quantitative tightening took us all the way through the 2018 bear market, and we even bottomed down here and started rallying when we started getting close to the end of QT because it was becoming pretty apparent around this time that quantitative tightening was going to end. And then you can see that there was a little tiny bit of stimulus before an enormous amount of stimulus because of the COVID-19 pandemic. We're entering into this era on the balance sheet, which means we are in this era on the price, which means that theoretically we could be seeing something like that take place relatively soon. And so when we start to see this quantitative easing take place from the effective federal funds, not from the effective federal funds, I'm sorry, from the Federal Reserve buying treasuries, that is something that could actually end up stimulating the United States economy. So with all of that in mind, let's talk about the shorter term time frame and what impacts this is having. If you'll recall yesterday, because of the very clear pattern that we've seen lately of the Fed decision causing a drop on Bitcoin, we anticipated that Bitcoin would drop down to this zone. In fact, this is all a drawing that we made yesterday. We said we anticipate that Bitcoin would drop down somewhere into this zone. Now, instead of doing that, Bitcoin kind of front-loaded all of that, and we dropped down right here. And it's very important that we did, because as you can see, there are these two lower lows right here, and they follow this exact trend line. If we zoom out, we'll see that that trend line is the exact same trend line that is set by our set point. our pivot point up here around the 29th, the 27th and the 29th of October. And then we have our set point right here around the 10th of November. And then that gives us this very strong downtrend. Well, as you can see, we were below it. We rejected off of it. We came up to it and rejected off of it 3 times with a head and shoulders pattern here. We had a short squeeze that we just absolutely moonshot straight through that level of resistance, that downtrend, all the way up to our next level of resistance at 94. And so we've been looking for an overside-underside test, or a underside-overside test, excuse me. We had our underside test. We tested on the underside of the trend line. You break through, and then you have your overside test. If Bitcoin at this point in time starts a rally here, then what that'll mean is that that'll be an excellent entry. That'll be an excellent place to anticipate further increases in the price of Bitcoin. And so we would expect, as Bitcoin rides down this trend line, as it possibly comes up to this uptrending level of support right here, that it would find a bottom at some point before Saturday. Hopefully what we end up seeing happen is that Bitcoin does not have a major rally over the weekend, because then we'll end up setting a gap that we would end up having to fill. But at some point here, what I think you're going to see happen is Bitcoin is going to continue riding down this trend line right here. And at some point in the next couple of days, I think it's going to bounce and rally back up towards 94. And I do think that what you're going to end up seeing is that this is going to be a much smaller correction following the Fed meeting than what we have seen in past. And the reason for that is quite simply because this is the Fed meeting that we have first heard about quantitative easing. This Fed meeting is genuinely different. You know, the phrase "this time is different" is honestly very often a dangerous phrase, but in this case, things genuinely are different. And so I would anticipate at some point Bitcoin starting to try and move back up towards this downtrending level of resistance, with the pivot point up here on the October the 6th high, and then the set point right here on the October 27th set point. I would anticipate Bitcoin making a run, making a correction down here to the bottom of this trading channel, and then trying to ride it all the way back up here. And we may end up coming up to this downtrend right here around 94,000. If we do, that is a 1, 2, triple top. Generally speaking, if you see a market test a level of resistance 3 times, it's primed to break out. And then from there, that's where we could actually see a run towards 100,000. So this chart's getting a little messy. Let's kind of rebuild this over here just so that we can get a good perspective. Kind of recap. We've got this downtrend right here that Bitcoin is currently breaking through. We've got this downtrend that is going to be important in the near-term future. And we have this uptrend, which acts as our current level of resistance. We have this uptrend that acts as our current level of support. And then we also have the horizontal level at 94,000, which we've discussed in previous videos, kind of bracketing everything. And so this is our current market structure that we're paying very, very close attention to. Bitcoin broke this trend line, and I anticipate that over the next couple of days, we're going to bottom out somewhere in this zone and rally right back up to here, and we'll be testing 94,000 and this longer-term downtrend at the exact same time. And then this is going to be a really key decision point, because if we do end up breaking here and going to the top of the channel, then that sends us up here towards $100,000 sometime in about a week. And then if we see that rally up towards about $100,000 sometime in about a week, that is going to be that decision point that we've talked about out on the weekly chart, where Bitcoin is going to be running into the 50 weekly moving average. If you'll recall, the 50 weekly moving average is sitting up there at approximately 100 to 102 right now, about 101,900. If Bitcoin rallies up here and it's testing that, then we're going to have to see if we can break it. If we break it because of the idea of quantitative easing coming in, then that's where you're going into a bull market, and 2026 is going to be very bullish, and we could have confirmation of that before the end of the year. On the other hand, if Bitcoin rallies up here to the 50 and rejects, that's where we have confidence that this moving average, the 100 weekly moving average, is going to break, and Bitcoin would be going into a 4-year halving cycle bear market. So all of this short-term analysis that we've discussed here actually is very, very exciting, because it gives us a lot of perspective about how, when, and where we're going to end up getting back up towards about $100,000 to do that pivotal test. Are we going to have a breakout to the upside in 2026? Are we going to have a rejection and fall into a traditional 4-year halving cycle bear market? We simply do not know yet. But what I can tell you is that there is a high likelihood that Bitcoin's going to find a bottom at some point in the next few days, somewhere above 88,000, somewhere above 85,000, and from that point in time, you're going to see a small recovery. And if we can break through 94, get up here to 100, then that's where all bets are off. We've got that major test that we've been looking for. And so from my perspective right now, this event, how Bitcoin has responded to the effective federal funds rate decision, and how it's responded to the announcement of $40 billion of quantitative easing, which, by the way, is not going to be the end of it. There's going to be a lot more than that. The economic outlook is trash right now. It's absolute garbage. I almost used a different word there. It's absolute garbage. So there's going to be more quantitative easing. They're not going to announce that yet because they don't want to spook markets, but it's coming. You're going to probably see at least $40 billion a month. If you see that happen for the next 12 months in 2026, that is a $500 billion of quantitative easing taking place in 1 year. That is not COVID pandemic levels, but it is pretty dang high. That's a $500 billion a year, expansion. Very, very, very important to the economy. That's a lot of liquidity. You're going to see mortgage rates go down. You're going to see credit card rates go down. You're going to see personal loans, personal loan rate go down. You're going to see the treasury rates go down. You're going to see the mortgage rates go down. I've already said that. Bond markets are going to crash. You're going to see a lot of impacts from that quantitative easing. And when you do, that's going to lead into a risk-on environment where people say, I'm scared of inflation, but I also have easy money, and that is the exact catalyst that led to the last bull market. The last bull market was predicated on two ideas. It was predicated on cheap capital because of very low interest rates. The effective federal funds rate was zero back here, zero. So cheap capital, people were borrowing to buy Bitcoin left, right, and center. The arbitrage of shorting the dollar and longing Bitcoin was the easiest it had ever been, right? So people were borrowing anywhere they can as much as they could to buy Bitcoin. And then there was the second component that led to this massive explosion, which was fear of inflation. Because at this point in time, inflation was 10%, and everybody who knew anything knew it was coming, so they were buying hard assets 6-12 months earlier. And so you had cheap capital, and you had fear inflation that drove this massive bull market. And you're going to see the exact same thing happen within the next 6, 12, 18 months. I don't know whether we're going to drop down here first before it happens, but as we continue to get more information about the rapid rate of quantitative easing that the Federal Reserve is embarking on, I do believe that this shifts the overall market perspective bullish, and I do believe that it means that in the next 2 years, Bitcoin is going to be significantly higher than 120,000. I don't know whether we're going to go down to 50 or 60 during the bear market. If we do, I'm going to be so happy because I'm going to go and get as much cash as I can from anywhere that I possibly can find it and dump it into Bitcoin. But what I can tell you is that in 2027, I'm very confident that Bitcoin is going to be way higher than 126. So if you can just hodl your coins, if you can just manage not to touch them for the next couple of years, you're going to be in great shape, at least in my opinion. That's what I'm seeing. And before you say, Jeb, what are you talking about? You don't know what you're talking about. That's where like 80-something% of our net worth is in Bitcoin, because I firmly believe in Bitcoin. It is the future. And so I put my money where my mouth is. I put my sats where my speaking is, if you will. And that's what I believe in. So I think that you're going to see a very serious easing cycle coming in very soon. And when it does, it's going to be extremely bullish for Bitcoin. So let's see if we can break through 100,000. If we can break through 100,000, hit that liquidity pocket up at 107, there's a boatload of short liquidations up there. Probably like genuinely probably $3 to $5 billion worth of short liquidation sitting at 107. If we just even tag 107, all those shorts get liquidated. Bitcoin catapults back to all-time high in January. And then bear markets cancel. Bull markets back on. Super cycle is confirmed. Bob's your uncle. All right. Well, hope you enjoyed today's video. If you did, I want to give you a big reference, and that is that you should absolutely sign up for Femex. If you guys have not signed up for Femex yet, I don't know what you're doing with your life. Femex is a phenomenal cryptocurrency exchange where you're going to be able to leverage trade Bitcoin and different cryptos. So make sure that you sign up for Femex with the link in the description box down below. And when you do, I'm going to be giving you access to our very own trading course that you can get for free when you sign up for Femex. That is coming out very soon, and when it does come out, you are going to be able to get it. And the only way you're going to be able to get it is by signing up for Femex and trading $100, and then sending your UID in to our team, and we will see that you've done some trading, and then we will give you that course free of charge. The only way you're going to be able to get access to that trading course is by signing up for Femex, though. So make sure you sign up for Femex, one of the world's most trusted, largest, absolutely most secured cryptocurrency trading platforms in the entire game. So make sure you sign up with the link in the description box down below. If you enjoyed today's video, make sure to hit that like button, subscribe to the channel, follow us on X at CryptoJeb. And before I go, I do just first want to thank each and every single last one of you for watching as always, and I will see you guys in the next video. Peace.